Hello, ladies and gentlemen, and welcome back. Well, what a 24 hours in markets and what a big session we have coming forward. Yes, it was a pump, hold the rally, and then after hours, confusion and dump. The markets are setting up for potential island reversals. Let's look at some of the headlines as we enter into a video where we'll be talking about stocks, commodities, and cryptos in more detail. Apple earnings show steepest declines in more than 6 years. A big one there. Google missed on its holiday revenue. And then, of course, Amazon, a big drop. 2014 was the last time we saw such a bad holidays quarter. With that, coupled with Starbucks also missing due to China sales, we know that we're in for a very interesting time in markets. But is this a point where we have to be absolutely terrified? We'll be talking about both the bull and the bear cases moving forward in today's video. So join us as we cover some big stuff. Well, welcome back everyone to the Daily Show. We'll be talking about the lead indicators, the macro data, and the key levels that you need to be watching across all markets right now. Let's begin with something we've been following since realistically heavily around the 4K level, smart money versus dumb money inflows. Now, when we get a big disparity here, it is a tool that can help us to identify potential FOMO peaks. Obviously, it's not going to be exact, and that's why you have to use this as a swing-based concept along with your TA and potentially options. But we've seen a huge disparity over this last week of trade. You can see smart money's super drop-off while dumb money picks it up. Now, traditionally, when we've seen these, we've used to also see a huge amount of calls coming back into the system. The good news for bears is that is happening. We're seeing robo-put-call ratio here drop fairly substantially, but it's not quite under this green line yet. And again, if we think about some of those huge rallies that we saw in the previous year of 2022, we haven't quite gotten down to that peak kind of FOMO yet from at least the put-call ratio. However, the price action was telling us something different. Do remember to follow us over at FX Evolution on Twitter. I've posted up quite a few things there recently that we don't cover here on YouTube, so it's that extra bit of information if you're interested. And take a look here at the set alert that we have on Tesla. It just didn't hit it. This is an extreme zone though. Anywhere between this expected weekly options high and this extreme high is a point to be very, very, very careful on Tesla. And if you're a bull, this is a zone that you should be a little bit scared of. We'll explain that later as we do a deeper dive into what we're seeing in terms of options calls. Do remember as well, next week kicks off our daily show, also being condensed into a very quick format. If you're interested in following along, check out our TikTok. We'll be posting there 2 minutes to 3 minute kind of videos, making sure that we cover everything that you need to know about markets as quickly as possible. So if you're interested, go check that out. Also, fear and greed index starting to rise up to that 72 reading. We know that this is a time to be cautious. Obviously, you always want to follow the trend. We know the trend has not been reversed at this stage, and it just continues to grind up at this point. We'll look at the key levels later on. Beats versus misses during earnings season. As we know, we've kind of kicked off the biggest part of earnings now. The rest is, to be expected realistically, but we've got 65% beats 444, misses 234. Doing a little bit better than I would have expected. It was at 62%, but with Apple, Amazon, and Google all missing, that's certainly not good news for these markets to hold up. So let's jump into the charts and take a quick look at everything we've been seeing right now into towards markets. And it's an interesting one. We'll start off with the VIX. The VIX has swept every single one of these lows. And effectively, this is a zone where you would start to think, maybe it's all over. Maybe the bears have lost, the bulls are in full control. We do have some significant bull levels and one critical bull level coming up for the S&P 500 that if that is hit and broken through, even I will start saying, okay, this is probably a new bull market run. We'll talk about that very, very soon. US 2-year, yes, the yields are starting to decline, but they're still not moving down. Even after the FOMC meeting, it just hasn't been able to break past that 4% on the 2-year, and the 10-year continues to hold its low for now. These are technically good signs to see inflation declining, but it also tells us on the 10-year that the disparity between 4% and 3.3 still means inversion, still means recession being called in the US, and still means a potential hard landing. Do not forget that. The bonds market is still scared, even though everybody thinks it's glorious out there. TLT, this is the treasuries. They hit the resistance and they sold off a little bit here. I don't expect TLT to do too much in recent days. I am obviously fairly bullish on this for 2023. It's one of my stronger kind of plays, and I still like it down in these areas from the potential and in terms of where I think it can get to in the future. Obviously, I'd be targeting these 120, 118 levels. We'll keep covering it, but not much to note in the last 24 hours. Let's move over though now to the dollar index. Now, this is where things get really interesting. What a reversal. Let's just take a look at this on the weekly. Wow, huge reversal here. Now, you could have used either the DXY, CFD, or the futures, and you would have got two different levels. But we'll notice that the DXY here spiked the low, and then the next session completely reversed. This is absolutely critical. It's where we speculated over the last 24 hours we would get to for the DXY, and we have been, and we've now come here. What happens here will probably dictate a lot to what's happening on the stock markets across the board. If the dollar has just swept the lows and it ends up rallying very hard, then we need to be seriously concerned about a market drop-off, because it shows that across the board, a lot of people were nabbed. Let's have a look at the DXY and speculate on the area that we believe the market would get to. So you'll notice here that this is what I would call the supply zone. If we then take the futures market, so we basically grab the futures market here and we look for the most heavily traded zone, we will find that it comes in right where price is now. So this is kind of like a critical point ahead of non-farm payrolls. It may not look like it is to some people, but I'm telling you what happens here is incredibly critical. If the market makes a new high, which I kind of hope it does, makes a higher high, and then it comes down and breaches through these lows here, I would expect it to continuously sell. And we know that the big news is coming out very soon. Jobs numbers tend to move the DXY and currencies a significant amount. If we set the levels, we'll just quickly put them there so you guys can see them. And these are the types of levels that we're looking for breakouts. I'm really excited about this currency. I'm starting to think that there's some great opportunities on the horizon. Remember, traders, you don't really care about missing out on, 10 or 20 or 30% of what looks like easy money. It's more of a trade vesting kind of concept. You just want more opportunities and more statistical advantages. Have that patience to react, don't predict. Temperament is everything in trading, investing, and everything out there if you want to stay in the game for the long time. Let's move over to one of the other things I want to mention here, which is probably going to be pound US dollar, because if we load up the pound USD and we take a look at that on the chart, have a look at the big switch change that we saw over the last 24 hours. It basically just dumped. And I mean, it dumped a lot. Same with gold, which we'll look at in a second. But yeah, these were significant weaknesses. We've been talking about this idea that maybe the euro was going to tip recently, but look at this. It's a huge breakout. And although there's probably going to be some rallies for the pound US dollar, that was a big shift. So it's back into demand for now, just like DXY is back into, of course, a shorting zone, and they're coinciding all at critical ranges ahead of this non-farm payrolls jobs number. Let's move over to copper. This is something that I really like as a level. Of course, it's my personal opinion. Don't go do anything in particular. You have to make your own decisions. But I've said for a while that copper hit my critical the other day, and it's starting to tip over in certain stocks, and you're seeing it throughout the metals. Now, remember, everyone's here focusing on tech. I understand that. You guys love tech. But there are other sectors in markets that you should be thinking about as well. Here we have, of course, a classic style island reversal. Will it play out? Well, options is the way to go with. This is BHP, biggest iron ore miner in the world. And of course, it's got an island reversal on it as of today. And it's been tipping over for a few sessions. Now, to be able to look at these types of markets, you might say, oh, well, who cares, Tom? 7%'s done in Amazon in one day. This is only 4%. It's all relative to the options price as well. So you've got to remember, moves are relative. But yes, a fairly weak looking session here for BHP, and certainly a weak looking time for copper. And we'll constantly follow that story, I feel like, over the next month. It's going to be a very interesting one, because if Dr. Copper starts to fail, then the rest of the market could be tipping over as well. And especially if we hit critical S&P 500 highs, which we'll look at in today's video, oh wow, it could be a doozy. What a trap that would be. For high-risk players, this trend line up here, you can see was an interesting section for sells. Basically, we saw that higher high, it busted through and it came down. Now, I did like this area in here as seeing potential buyers. We didn't see anybody. No one stepped back in. There was absolutely, and that's why it's really important to wait for to see them actually structure up. You can see here they started structuring, they made a new low, but until they break through 1927, you can't be sure that there's really any confirmation towards the upside again. A lot of people now are getting very freaked out about gold as it did just make that higher high. I won't be prepared to even say this thing's bearish until it gets through our zone down here, which we've mentioned several times. But look, great stuff coming in here. Super opportunity, non-farm payrolls. We know there's levels and the zones. We've got that 1927 plus breakout to the upside, could be very key in the next 24 hours. And of course, if the markets do choose to go and turn around and it was all a trap on the DXY, look forward to that with a rally, with a potential sell coming forward for gold. I've said for a long time, I run gold generally in the back of January. We finished with January. It was great. It was a glorious run, November to January. Perfect. Thank you very much. Now we move into a period where I'm less sure about it. It's February. It's not a great time. Now, are we in a blow off of FOMO? This indicator helped us to kind of define that it was probably a risk on all the way back here a while ago. Admittedly, of course, I thought at around 4K to 4.05, so 405 on the SPY, we'd probably run out of steam. We've continued to go, and that's the nature of the FOMO markets. Remember, most great investors look for 2/3 of the move, and yeah, it's been an epic one, that's for sure. I thought Tesla would crap out about 155, and then the next level is where it is right now. But if we think about XLY, XLP, what a gap! Basically, the market is full FOMO'd into this. Now, historically, has that happened in this indication? Well, we've had huge rallies, of course, during the pandemic. We had that super rally of consumer discretionary versus staples. Then we saw a massive dump. Then we saw, of course, renewed rallies. What generally happens, though, is that when you start seeing these huge disparity gaps, you've got to start questioning things. And obviously, this is a very big question of, was that too fast, too hard? The next day, I expect it to probably open up down. Is it going to leave this random island over here? Well, let's have a look at the stocks moving forward. US oil continues its drop here. It's looking relatively weak. We do have that trend line on the way up now that we're hitting ahead of non-farm payrolls. So if the buyers are going to recommence, they have to right now. On natural gas, although I don't want to cover it too much today, take a look at this. So obviously we had this level down here as our critical over the last video. We're still in that zone. I'm going to watch natural gas because I'm very interested to see how it builds over the next coming weeks, but it's still not shown turnaround. It is an epic collapse, but you don't buy epic collapses. You look for some sign of recovery. There's none there yet. Let's move over to Tesla. As I mentioned, this is it's super critical zone. We'll look at the options in a second together, but what a level. Expected weekly high is obviously where it ended up closing. It's going to open down at the time of this recording, you would think. Has it left an island up here? Because we know there's a lot of potential gaps that have been left behind by markets as they've rallied through. I mean, Tesla off the bottom, just to put it in perspective, has moved 93% since realistically the 5th of January. So that's an incredible move. I mean, obviously 100% has been put in by a couple of stocks, but this level here, the 200 zone, the reaction to that's going to be key. If we end up seeing huge buyers recommence, I've got a set alert here for a reason, and I'm going to be looking at the reaction through that. We do know that this is the value area high as well, and the POC basically sits in this range. So again, if I was to slither out a price for Tesla, it'd be this level where the bears recommence, somewhere in here. Practice risk management, you've got to do that. A lot of people have been ripped up in CFDs and futures. You've got to remember, you have to have risk management. Options is a great strategy. I've been always big on spreads, but you have to learn how to do that, obviously, or you can go check out some of our courses. Tesla, let's move over here. 200 on the call strike. Wow, 60,000 plus units opened there. You can really see the call starting to come through. Some mad dog over here is going crazy on 265s. I don't know who you are, but let's just say you've got got big nuts, I guess. I don't know what you're doing, but you're wild over here at the 265s, and good luck to you, sir or madam. And over here at the 200, this is the big level, and you can see the huge amounts of calls. Puts, unlikely to get paid this week. This call, I doubt wants to be called. But last week, the 150s, 155s, they were actually blown through. So you've got to be careful here. But this sits right on that extreme area. I doubt the market would wish to close above that by the end of the week. So just before we keep going through the charts, and we've got some great ones coming up, we'd like to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now remember, members of the FX Evolution community, there's a whole bunch of special offers down below. You can check out from any pretty much country whether you're eligible to go through. Just contact the Singapore office if your country is not mentioned down below, and they can see whether they can hook you up with an account. And there's also a bunch of special offers that we have specifically got here for the channel. Now, why would you potentially want to pick Tiger Brokers as your broker? Well, the reason is simple. There's plenty of great tools. During earnings season, you need news, you need earnings calendars, and you need live streams potentially for the calls. Well, a lot of those are inside the platform itself. I also like to look at opportunities of flow. Now, recently, of course, it's been great to be in semiconductors and automobile manufacturers and all sorts of things like that. But what is little known is some of the opportunities in the short side. Yes, metals, materials, those types of things, and obviously gas have been kind of weak in the recent 10 days. And that trend has continued through to the last 24 hours. You'll notice some of the weaknesses here in pharmacy, integrated oil and gas, and even managed healthcare. So there's different opportunities for different people depending on what you're looking at. That's why we've been talking about copper so much on the channel. So check them out, look at the special offers, and hopefully you can find one that's right for you. Let's move over to Apple, and another one that's opened up here. Huge rally, big level. As you can see, it's a monster zone, and then we've now seen stock after hours after earnings close down. So let's have a look at the 2 hour just to see what this would look like. Is this an island? Well, technically, yes. I mean, that's an island. It's the first island reversal that we've had during this entire rally. There's actually been no turn at all. Like, it's just been higher peak, higher, trough, higher peak, higher, trough, higher peak, higher, trough, higher peak, higher, trough, the whole way through. This would be the first initial sign of weakness. Obviously, once you get through these demands, then you can start to talk about actual weakness coming in. But look, interesting where it got to. Expected weekly options high, almost to the tap of where it is right now, and it's going to open underneath. So if we get like an initial rally and then it ends up selling as a bear, this was the day that, bears may get involved in it, depends on non-farms a lot, then yeah, feasibly we could have an island here. And it's not just Apple. Let's move over to Amazon. It's the same thing. We're not at a critical stage for Amazon, but we are at the expected weekly options high that we put in. We also know that stock after hours has almost taken off most of what was put on the previous session. And we know that this would look like an island. If we go down to a 2 hour, it's going to be the same thing. Here it is. Bang. The 2 hour, the gap down, that's a big one. If we then move over to Google, and we can see here this huge level over on the island, again, stock after hours, 102.78, coming back to that roll reversal area. Is that an island? Well, yeah, technically it is. It's gapped up, massive, possible FOMO. It's gapped down, massive after earnings. Certainly something to be concerned about and watching. This is the first time we've seen really any significant weakness. Every other time we've had gaps down, we've never had the kind of gaps up, or we've never been really in that kind of massive turn. We've obviously seen it break through trend lines. It's broken through key resistances. Is this the mother of all traps? Well, we'll look at both scenarios very, very soon. There's probably going to be some buyers, though, you would think, that would try to commit in the early session. Now, the last 24 hours was certainly not the Dow. The Dow did nothing. It was down, actually, most of the session. So this was run by FOMO into the Russell and into, of course, the Nasdaq. Here's the Russell approaching a key zone. You can see the volume was spiking up as well. So it was a pretty heavy session and a lot of buyers coming in. QQQ ended up taking this little high over here and rejecting it. Obviously, after hours, it's down. This will also be opening potentially as an island reversal. So these traps, have we seen this before? Well, we did see it over here. That's what actually happened. Gapped up, gapped down. That was the end. Then over here, we have a beautiful island reversal. I like that one very much. That was a great, great day, believe me. That was a great one. Then we've had island reversals over here as well, and we've had them in the upside. This is something you do need to be concerned about. I tend to like islands where you see rotation in them. So that is usually consumer discretionary, or maybe like the hot sectors start getting rotated out of and the market turns defensive. But it's a critical zone. And for buyers, they might want to recommence, but where do they recommence? Is it down a little bit lower? Do we allow a sell-off to occur? Let's have a look at the futures action. Here is the futures take for the Nasdaq, and it was sneaky. The US 100 took the high previously over here, you can see that purple line I've got, then it rejected it. Now, let's have a look here at the 2 hour, just so we can further understand how it broke out. So you see that 8 hour came back into this channel that we had in the previous session. Let's go to a 15-minute now and just have a look at the reaction that we had. So this is the after hours reaction. The market was rallying. It's all great. It sold off heavy, then it rallied, then took the high, forcing a higher high through. We now have those kind of lows here, and we've moved down. I do kind of expect a rally to come through, but there could be some levels in here where markets find further sell-off. Remember, it's most likely going to gap down. It does depend on non-farm payrolls, but if bears are going to have a shot at it, that's the type of thing you want to see. Little takes of highs to take out the stop losses that were put in during the sell, then it whips them out, pushes down, we get the earnings that are not so good, and then we potentially suck in that liquidity. Certainly a key level. For bulls, I mean, all you want, guys, is just bang, slap that out, take a new high, and it's on to one of the key levels that we'll discuss in just a moment with the SPX. Here's the S&P 500. You can see the unfilled gaps still above. We're approaching those levels. I want to focus on that level, though, right above here. The zone is going to be so critical, 43.25. Let me just quickly show you how much percent from bottom we would do. So we technically have now entered the 20%. That is a new bull market, theoretically, just got hit. Now, during 2008 and 2001, 2002, we've done this several times. So it doesn't, yes, it's a technical new bull market, but that doesn't mean anything in particular. We've seen it false upwards of 25%, but never more. So if we took the bottom off, I don't think never more by more than 1% after that. So if we actually think about this 43.50 level, this is so critical. Now watch the stack that I'm about to do on futures. We'll just quickly look at the SPY. Obviously, we're above the expected weekly options high, which sits around here. So, that would be a cause for maybe the markets wanting to pull back down. Here's the 8 hour chart of the ascending, so you can see where it is. Look where it closes at 41.55, right on that high, taps into the liquidity here at 41.97.42. Interesting zone, certainly a critical level for it. And if we scroll down to the 15-minute chart, it doesn't quite have the same high take. Look where it came back to. It didn't quite get the new higher high, and it's come back. So I think that it's a very tough point here for the US 500, but obviously the islands on the tech stocks are the big one. So I wanted to stack the level and show my uppercase boundary level. And I said I'd bring this into the chart, and it's stacked in here. It's basically around that 43.50 zone. And what that would do is it would take all of the previous highs, it would stack with some of the most traded zones throughout the pandemic, high getting taken out all the way to the run, and all of the drop off right now. So it's an incredibly stacked zone. And I do like confluence stacking. So if this market's going to continue to go bullish and it's going to breach this 4,200, I don't see why they wouldn't try to push it up here. I'm not sure that's going to happen. Of course, at this stage, there's some serious bearish catalysts here. But if they need to get more calls in the system and expire more puts, and that's the way that the composite man or the big players want to do it, this is a cause for concern. And of course, this is here, I believe, the most critical level of the markets. And look, that's just my opinion, but hey, I'm just trying to show you what I'm thinking about here on the channel. And of course, if you're interested in those types of things, always remember to subscribe. Let's have a look at the options. We'll refresh this here just so you can see what's going on with Options World. And Options World is pretty interesting. Obviously, the Thursday there, you can see the 420s. They're not going to get, well, they didn't get paid. They lost out. Let's have a move over to current price though. So we've got 410s, and then we've got super amounts of puts still, 400 puts and 395 puts. Still stacked. Everybody's still trying to go bearish. That's a problem. That's why the market's rallying in the SPY. And you can see here the 410. So theoretically, the market might wish to come down a little bit. Max pain sitting at 400. That'd be a great level for them to close at if they wish to. And it looks like that last 24 hours may need to be kind of faded if they're willing to, make the most amount of money in the options market. This is nowhere near a huge options week. To put it in comparison, we go to the 17th, you can see there's already 4 million units there, and the options are starting to get kind of fierce, unfortunately, with the puts as well. They keep stacking these levels. It's very frustrating if you want the market to go down, because it's lame to see them stacking so hard here. Don't know who this person is, but yeah, there's a bunch of 460s in the system as well. But at least there are calls coming back in. So if you are feeling bearish, it's very tough to short into such options plays. And in the last week or two, these Februaries continue to get stacked on, which is a problem. So this week, we're thinking 410 under would be the best for the markets to try to get to that 405, 400. Maybe a bad Friday's coming in. But overall, unless we see a change to this chart, we need to see more calls entered into the system. It's a big deal. And it's traditionally what allows markets to turn around. What about crypto? Well, it keeps just kind of chugging along. Bitcoin just going up on this ascending. Is this all part of a big fall that happens? You know our thoughts. We get underneath here, then we move to the next level. At this stage, we've got a set alert well above the highs. That's going to be that critical point. And if FOMO gets out of control, probably something like this happens with Bitcoin at the same time as we see the stock markets hitting those critical zones. Yeah, it's a big one coming up. Remember, non-farm payrolls comes out 1 hour before the market, so that's going to send some shock waves through it. And this is the unemployment numbers. Then we have ISM Services PMI. So that really brings us to the end of today's show. A special thank you to Tiger Brokers, who of course sponsored today's video. Links in the description down below if you're interested in joining them and getting any of the special offers that they do offer the community here at FX Evolution. If you're interested in following along with our daily small snippet show, definitely follow us over on TikTok. And of course, we're really focusing on a lot of our socials here to offer you guys the most amount of edge as possible in 2023. Another thing I would like to mention as well is the competition. So thank you so much for everyone that went into the Chinese New Year competition. We'll do the prize draw right now. Let's take a look at it. Okay, so here comes the prize draw. We've got 5 prizes to be given away, and it's going to be in order. So basically, the person at the top of the names is going to get the biggest prize, and then we'll drop it down. We will email all the winners, and congratulations to anybody that joined in. I'm telling you what, you gave yourself incredible odds over this period. So let's press the start button. It's going to load it out. So remember, the first person's going to win the biggest prize, which is the private group mentoring, and then we'll go through, I think it goes options, advanced scalping masterclass, and so on and so forth. Here we go. We're about to get the names, and there we go. So Andreas Jones, you're the winner. Then we got Dane, Paul, Bart, and Michael. Congratulations, guys. I'm glad that you took advantage of the offer, and what a great competition it was to be in.